broadcast is now starting. All attendees are in listen-only mode.
Check, check. I'm getting green bars. So used to the Wirecast broadcast studio and not GoToWebinar, but I like GoToWebinar better. All right, good. Well, greetings, everybody, and welcome to the first of our new series of TAB29 OCRs. And I'll just get that in there. So I have a title slide or a thumbnail slide to put on front of the presentation. All right, 24 April. Which means it's only 8 months until Christmas Eve. It's already the 25th for some of you, so 8 months out until Christmas. So let me back up and talk a little bit about what we're going to do here. So the OCRs are going to be designed to be a combination of things. They'll be things that I see in the heartbeat of TAB29 traders from what I see in trade postings. They will be specific trades that were just really good and demonstrate solid TAB29 understanding. There'll be trades posted where there are questions or maybe better ways to do things or other considerations one may have. And then if there's time at the end, questions at large. But I don't, in these kinds of series, I am trying to strive to limit the length of the session so it's practical. I do enough sessions during the week as it is in many areas, and I'm really working to get these down to a recognizable length. And those who've been around for a while know that's always a struggle with me because I don't like unanswered questions, or if a thought comes along that's relevant to what we're doing, I surely always want to seem to answer it. So, oh yeah, May. That's kind of funny. A little bit of where my head is. So I am a little bit off. Well, how's this? I'm a little bit more off than normal. I have somebody who has copied my stuff and is out selling it. I'm not talking about those old Chinese guys that have the 15-year-old version of multi-wave in its very, very, very first stage and are selling it online. I'm talking about somebody who's taken my most recent work and is selling it. Oh yeah, it's still May. This is RAS at work, so you guys are getting a great lesson here. Can't talk at the same time. I'm stuck on April for some reason. So I got somebody out there trying to sell my stuff. Well, they are selling my stuff. And as always, what ends up happening is they're out there enough and they start getting a little exposure. And the next thing you know, one of my students or one of my existing prospects coming to me and goes, can you tell me what the difference is between your stuff and this guy's stuff? And I'm like, yeah, mine's the real thing. And so the thing is, very clandestine, no names identified, just company names, etc. And the icing on the cake is it ends up being a former student. And so that just affects me a certain way. Um, how somebody could look in the mirror and do that. And of course, what makes it even more fun is I find his page on Facebook and I go there, and some of the most recent posts, he's talking about what a religious man he is, and blah blah blah. And I'm just very frustrated that somebody would come here for the purpose of seeing what we're doing, how we do it, and then turn around and try and create something on their own. And it's sad because it confuses the market. It's sad because while his look and feel is very much the same, he doesn't know quite what to do on the inside, and he doesn't have it right. And so, he creates confusion because people will see that and think it doesn't work because it doesn't. But it just a little bit, well, that's a lie. In a large way, it just shakes you up when something like that happens because it's, two reasons. One, I tend to put a lot into my students. That's what I do when I coach. And then two, just your trust in mankind in general. And I know he doesn't represent everybody. And the larger you get, the more things like this will happen. But this is, I haven't had a major situation like this for many, many years. And it's not comfortable, especially with everything else I have going on. And then him, when I corresponded with him, communicated with him, he's essentially trying to deny it. But there's just solid proof. So I have some very solid proof. So anyway, I got to deal with that. And if he thinks I'm bluffing, my only resolution is to take him to circuit court and in a civil court and sue him for fraud and theft of intellectual property and racketeering and all those great things. But circuit courts aren't cheap. And if he doesn't buckle with the first letter from the attorney, circuit court like that, you're probably looking at least at a $30,000 to $50,000 proposition. And that's the part that is sucky because if I don't go after him, he's out there. And like I said, I already had prospects coming to me now, saying, which should I get, yours or his? And of course, he's trying to undercut me because he doesn't have the knowledge or everything that goes with it. And anyway, so I am a little, I kept putting April up there. I am a little just twisted up mentally right now, so I apologize. Okay, so TAB29 and these sessions. So I explained how we're going to do them. I prefer, if you have any questions, to get them to me in the early part of the week. A question that comes in, 10 minutes before we start, or even 4 hours before we start, is probably not going to get looked at or able to put in these because I want these to be time sensitive sessions. That being said, I'm going to proceed. So one thing that I think a lot of you are missing is, the reality of money and how it's made with compounding. And, there's some guys in IML that have some very short-term trading strategies, some scalping strategies. I don't like at all what they're doing because from my perspective, it's not rational to trade like that. But nonetheless, the concept is short pips. And I think you guys forget that. And some of that comes from your pre-programming, okay? Some of that comes from greed, and that's a little confusing. You have to, I really want you to reflect on this part of what I'm talking about today. It's just ridiculous the money that can be made that you've never had before, and yet you're not accepting of that. You want to do more. And I'm going to encourage you to be careful with that because, again, all of the trader physiology comes to play. And, I don't understand gaining 20 pips in a day to give up 13 or 15 of them. You're putting in so much effort and you're messing your RAS. You're taking the joy out of trading because you're going to end that day going into the next day thinking, as you go to bed that night, well, maybe tomorrow it's reversed. Maybe tomorrow I win 15 and lose 20. So the constant going for more, going for more, going for more is something you need to think about why you're doing it when these numbers sit in front of you. Now I'm going to show you just subtleness here. And I've done this several times, but I'm going to do this in just a quick fashion because y'all are familiar with this calculator now. So I'm running side-by-side comparisons here, orange and green. First field here, or the first columns here, are the number one, and over here is number two. And we can look at number one with a 10 pip stop loss and a 5 pip gain. It yields us our 1%. So this is down to your 1% daily compounding. Now that is 5 pips net, right? 5 pips net. And so it gives us our 1%. So this just becomes a 1% calculator. But we can have different numbers of days in the month, right? If we trade almost every single available day in the month, there's about 26 trading days in your average month. If we take a couple of Sundays off, or birthday or anniversary dinner, or you're sick or whatever, 23 days in a month. Get all the way down to 20 trading days in a month. So obviously the income and the compounding over time really makes a difference. The other thing is what influences you for your mental state regarding pips. Guess what? Your peers. The same peers, are sets of peers. You've made decisions through your self-development. You're not going to let, negative Nelly and whomever upset your cart, so you disassociate with them. Oh, you can't do this. Oh, you'll never do that. Ha, ha, ha. You'll be back at McDonald's in 6 weeks, whatever. And you learn to ignore them to go trade the Forex, to spend the time and the sacrifices and the money and the energy, emotional energy, whatnot, to learn to trade. But then you get here and you forget the whole concept of not allowing other people to influence you. And you have massive FOMO over, blasted Facebook. Oh, so-and-so, I saw one last night. Oh, I made 525 pips in just one trade. Nothing against the person saying it. Nothing against their, if you want to call that success. But don't let it influence you. It appears bigger, but I'm here with many years of experience and many years of trial and error, many years of finding out ways how the light bulb ain't going to work. And I'm here to tell you that when you go for big pips, you are, on a daily basis. Now, I'm not talking about somebody that sets them up as a 4-hour, 8-hour trader and they get one trade, once a week or once every 2 weeks and they get 700 pips off of it. That's a different thing. I'm not talking about that. I'm talking about the guy that's on the charts every day and is always out trying to get big pips. Well, let me just show you how idiotic that is. So 5 pips a day, starting with a $5,000 account, got to get that in there. making that 5 pips, gaining the 1% gain, we can see that $5,000 can turn into, at the end of a year, $55,000. Well, that's a pretty big gain, really, if you think of financial markets. I mean, go to 100 people and say, if you put $5,000 into an investment at year end, it gave you $55,000. They get very excited about that, but that's not exciting enough for you, right? If you were doing 23 days at 77,000 the first year, and if you were doing 26 days, 111,000 first year, yeah, those extra 6 days double your income. So now let's watch this. As you can see, the numbers match side by side because they're here the same: 5 pips, 10 pips, 5 pips, 10 pips. So over here, let me put 10 pips. Oh, wait, let's go second year. Let's go to full 24 months. Didn't do that. 593, almost a million, 2.4 million, 2.5 million. 24 months, 5 pips. And see, the thing is, that seems ridiculously high, right? Your mind has a hard time grasping that. And it should, based on everything you've been taught in your past life to date. I don't mean you've been reincarnated or anything. See, so the challenge with this is that is so big, you have a hard time believing it. And yet this is so ridiculously small. And you get lost in the translation here. If this is all it takes, and this is as it is unbelievable. I mean, who here 24 months from now having $2.5 million in their trading account and wouldn't be excited? Is there anybody that wouldn't be excited? Please say me in the question box if that would not excite you. And yet you've never come close to that. And it excites you to the point of being, well, I don't know if that can be done. And yet this is all it takes. So this is the missing connect in here, right? And yet, you got to get through this. This isn't enough. All right. So you're thinking with your TAB29 trading, well, hell, if I can get 5 pips, there's no question I can get 10. I'll just put in an extra hour. Or if I got 5 this morning, I'll go get 10 or 15 tonight. I know this because some of you have told me. So fine, let's put 10 in here and now see how ridiculous this is. And you have to question why you think about this. So again, those numbers are going to appear over here now. You see these numbers are the same right now when it's 5 and 5. When I push the return on this, in that same period that you would make $2.5 million, you've made $1,162,725,000. Well, hell yeah, I'm going to go for 10 pips, so that's what it's going to do. I don't know anybody that's been a Forex billionaire in 2 years. So what's the issue? The issue is you're not going to get from here to here by adding an extra 5 pips a day. If you netted 10 pips a day, you indeed would get that. Well, from a mathematical perspective, you'll have account logistics and bank logistics and whatnot, but we're not going to bring that minutia in right now. And so something's wrong. It's not just about the pip gain. It's how possible is that pip gain? How possible is it to end the day at 5 instead of trying to go for 10? Because 2.5 million isn't enough for you 24 months from now. You have to have 1.6 billion. Or 1.1 billion, excuse me. So I hope you see what's going on here. Even subtle changes in this number, you go from 10 times more, from 2.4 million to 29, almost $30 million. Just 2 pips. And that's what I want you to see, because I see so many of you make X amount of pips and you're just not satisfied with it. It could be 11, it could be 17, it could be 12. You're just not satisfied with it. You beat yourself up. Oh, if I would have used a different money management, I got more. 5 pips a day. The whole purpose of new paradigm trading, the whole purpose of tab 29 is to let you have the premium of premium. You don't have to take crap trades. You don't have to take lottery ticket trades. You only take trades that you've seen and taken before, and every other time you've taken them, they work. Now, there's a little asterisk on that. We know we could be talking 9 out of 10 or 90 out of 100 or whatever, but you know what I'm saying. You don't have to take crap trades. And I understand in demo mode, we got a whole range of traders here. People that are brand new to tab 29 yesterday, and people that have been with it since June 7th a year ago, which will be the first day I taught tab 29. And I understand I push, your demo account, your experimentation account. But some of you are experimenting for the wrong stuff. I can't, I don't want to give an investment advice. Ben's asking, so should we quit after 5 pips or, do something else or, just get off the charts? Here's the deal, guys. Why are you trading? You're trading to eventually not just be financially free of a job for you or your spouse. You're not just trading to gain that financial independence. You want financial freedom too. You want to be able to put very little effort into trading and make huge money, because that means you get to have a lifestyle so you can spend some of that money. Forget money. Let's just say you had, $5 million in the bank and it was secure. Describe your ideal day. What would it be like? Sleeping in, getting up early, going to the gym, not just for an hour, but for 2 hours or 3 hours, going to a sauna, a spa. Instead of 20 minutes to an hour of reading, you could do that 2 or 3 times a day. You could travel. You could see people. Friends, make new friends. You could surf. You could be on your jet skis. You can parasail. You can go to the mountains for 4 days. So much of life to live. And the last thing you want to do is go so hard. I'm not saying in training and I'm not saying in reading, but I'm talking about going for so many pips, not under the guise of learning. Because when I hear the conversation, it's not about learning. It's about I could have had more pips or I lost these pips. Just understand what you're trying to do on the charts. And I hate to see people come in, spend money, spend time, and that gets into the years and they're in the same thing. They're in that, doing the same thing, expecting different results mode, which ain't going to happen. And that's that definition of insanity. And so what's going to happen is they're going to burn out at some point. I see it all the time. I got students like that all the time. All of a sudden, instead of, 5 days of posting, you see they're down to one. And for regular meetings or whatever, like OCRs, all of a sudden, they were there once every week, and then now it's once every 2 weeks, and now it's once a month. You see them slowly burning out. But they did that to themselves because they didn't know what they were doing. They didn't know what their plan was. Once you're trading live money, here are the results. I mean, this math is not fake in any way. Right? So, again, I understand. Here's, and I went over this in the physiology class. The trouble is, some of you have expectations. Some of you have need, and you're gonna let that ruin your forex opportunity. Oh my God, 20 times a year I run into a prospect or a prospect who turns into a customer, and then they tell me, I've got to replace my job income in 3 months. Can I do it? And I'm honest. I say, no, you can't. But that's the need. And now ego kicks in because when I tell them they can't, they just don't have any other way to do it. So they're going to say, I'll be the one that's different here. I'll rewrite the book of what a forex trader is. Expectation, same thing, And a lot of that comes from, and this gets complex fast, I'm going to stop here. A lot of that comes from your significant other and pressure they put. And pressure, you gave them permission to have that pressure because you had expectations and you told them, yeah, it's going to be fine. I'll do that in 3 months. I'll do that in 6 months. So they lay back off you, and then 6 months later, you're still, your equity curve still looks like that. And they're like on your case, which puts even more pressure on your RAS, and you end up taking it down instead of up. You have to understand this number is just fine. This number is just acceptable. And you don't need to have any pressure here. I've been through that in the first session we did, the first special session. How much money can a trader make and when can they make it? And, Robert Kiyosaki, get multiple streams of income. You have a job. I know you hate your job. Well, find a job that you don't hate so much until you're trading and you're replacing your job income. To say, well, my circumstances are different. This has to be 25 pips a day. You can plug that in the math all you want, but it ain't going to work. I mean, you can see just going from 5 to 7, we're talking about 2 extra pips a day, and we're tenfold in the income by those 2 pips. So you don't need to go and get big money. What you need to do is trade in such a way that you secure those pips. And you do that by taking selective trades. Master one thing first. Dogs just went for a walk and they come back, they're all panting. All right, so let's look at a chart. Well, first of all, you need a life plan that comes with goal planning. A lot of our traders use GoalMaker, not a plug, just a fact. You got to have a life plan, and your Forex efforts are part of that life plan. So then you can drop down and make a complete plan for your Forex. Don't do it in a vacuum, and don't do it setting your own expectations, or if you have needs, you need to fulfill those needs somewhere else now. Until you ramp up your Forex work. And then you don't need but so few dollars. So let's look at a chart, and let's just take some of the easiest things for tab 29. The easiest thing and the most elementary thing in tab 29 is a 10-minute, 1-minute harmonic wave convergence, otherwise known as a 10-minute harmonic wave convergence. And the other thing you want to look at then is, how do I get that best harmonic wave convergence? I don't want to skip to the end, but I'm going to tell you that you guys have much more power than you think. And unfortunately, your life, and this is why, again, why the trader physiology is so important. This is why self-development is so important. You have programming in your head that not only puts limitations on you, you have programming in your head that makes you a victim. And a kissing cousin to victim means I won't know more unless somebody shows me. And I will say 95% of traders, and I will include the people that are here right here today, have that mentality. And yet you have a chart. You're not going to break your trading view charts by drawing on them or analyzing them or anything else. You have the ability to track what goes on, to try something and to see the results. Not guess at something, but try something because you've been taught something and you're trying to implement that, and you've done it progressively. And what I mean by that is, well, right now I'm saying this is the place to start for a tab 29 trader, a 10-minute trade. That'll give you what we call a burst trade. It's not scalping, but it ain't going to be 50 pips. But that's why you get in there with your 2% into a 10 pip stop loss. And that's why you typically have, depending on how late you're in or whatever, a 3 to 5 pip MSL. You're still going to gain every 10 pips, 2%. Every 5 pips, 1%. Right? And you want to get the best one of those. I don't want to take a crappy one and be down -3, already thinking, gee, if I get a 5 pip trade, I'm only at 2 pips. Learn to take the best trades. Learn to find out what the best trades are. And this is where it's going to take a little accumulation of knowledge. Thanks, Ben. So the 10-minute trade, 10-1 converging. Now, that can't be done in isolation. What do I mean? That means you have to understand if at that time the 30-minute wave is going to influence the trade in very short term. So just looking at this chart in a naked way, if you will, in a vanilla way, I see over here the 30-minute wave is working its way up. So I'm not excited about this 10-minute trade. Oh, but Steve, now, I was going to jump on something, but I'm going to wait just a minute. Over here, you could say, well, the 30 minutes working its way down, but at the time of this 10-minute trade, it's in the middle of the power zone. It's not going to have huge influence off this in the immediate future, the next 10, 15 minutes. This one could easily finish its climb up, and therefore entering the trade here, I'm selling into the impulsive side of the 30-minute move, even though this is the impulsive side of a 10-minute move. So that's what I refer to as waveology. Understanding the 30-minute impulse is up, the 10-minute is down because we just had a 10-minute convergence. I don't want to sell into a 30-minute impulsivity this close to convergence. Over here, 30-minute wave's not a threat. Is everybody with me on that? So as this opportunity came along, I would say no. Doesn't matter afterwards that I saw, oh, look at what it did. Don't let that get to you. Remember, when you have a system that's 85 and 15, part of that 15 also has a distribution, which means 85% of the time it's going to fail. That's why it becomes the 15% loss. But of that 15, 15% is going to win. Meaning that kind of distribution just exists. Meaning if I use this as the rule, those sets of rules say don't take this trade. And those rules are based on 85-15 distribution. If you do it this way, 85% of the time you should win. If you do it this way, you're still going to lose 15% of the time. So don't do that stuff that registers in the 15%. So you don't take it. But in the distribution of that 15%, there's still going to be 15% that actually work. So if you screen something out based on criteria and it still works, you just move on. Don't get all, well, how could if I'd done this? If you have criteria that's established, taught, or learned, and it says don't take a trade, then don't take it. And don't cry about it afterwards. Hey guys, when I ask questions, you need to answer. And I got a bunch of people that are here but aren't really paying attention, because I can tell when you put something on top of GoToWebinar when it's not your most active panel. So when there's 40 people in a room and I ask a yes or no question, I should see at least 30 yes or no's. I know some of you at work, you can't talk. Some of you at work, you can't type, etc. All right, so you want to look for the better setup. Here, the 30-minute wave is in the middle of the page. And no multi-wave here, but again, you learn, you transition. This is too early to call this a 10-minute convergence. That's just too early. What that is, it's like a lower level leading upper level. So you're going to have a retracement and then the move down. Lower level leading upper level, retracement, my move down. So no trade, because, or more so here, sorry, because this really wasn't a convergence. Well, it's close, not close enough to be called a 10 out of 10 or a 9 out of 10. You want the best trades. You don't want to allow yourself to get suckered in. Oh, that's close. Oh, whatever. My 10-minute wave converges. My 1-minute wave comes up. I can have a trade. Now, what's one thing wrong with this chart? What is one thing wrong with this chart as I'm looking at it to analyze it and to potentially trade it? What's one thing wrong with this chart? See, why I like GoToWebinar versus the chats at IML is once somebody puts in the answer at IML, everybody sees it. So the way I have it set up here, where I don't want you guys talking to each other, so several of you got it, more of the experienced traders who've been around listening to me size things up, no pun intended. Yeah, your scale's not right. Oh, and I'm just going to make a comment. You can do what you want, but I'll just be honest. I don't like ever holding anything back. I'll just be transparent. I will engage more and offer more critique and more positive suggestions when you get your decimals down to 4 places or 2 places. Yen crosses, etc. I don't trade micro pips. I only trade pips. The extra digit confuses me. I don't like it. And it's an easy fix per pair. It's not like it's for your entire chart package. You can set, this to 4 decimals and your yen to 2. I think Mark and others have put up shots of how to do that. If you don't know how to do it, ask it again in your respective Facebook group. Not going to go through it here and now. Get it down to 4. I know some trading stations go out 5. I don't care. I'm just being honest with you. You can stay with 5 and 3 or whatever your yens are. You can stay with 5 here, and it's just taxing on me because, again, I'm looking for a norm. I want things to be normal in what we do. That's why we have color-coded waves. That's why we have color-coded forks. That's why we have color-coded plots. So you understand which is which. So 4 decimal places, 2 decimal places. It's not hard to do. So yes, a couple of you noticed these are 2 pip price channels. Now again, I have a horizontal grid. I'm not sure if it shows up in GoToWebinar. It's very faint. You can control the color. I use the darkest charcoal color. I use the one right next to black. And at that, I grab the opacity and turn it down, so it gets lighter and lighter. So they're just ghost marks, really. They don't disturb the candlesticks. I'm not going to have big bright lines up and down that have to be interpreted across pitchforks and fibos and all that crap. You can have them there to help you. And here's why, and I explained this yesterday to a trader. I want these at 5 pips on my 1-minute chart. Why? So I could trade subconsciously. I don't have to look at the scale. I could look at a candle and I can tell you how big that candle is. If you know, and I don't know if you can see it because it's faint, so I'll just draw these lines so you can see them. Let's go right in here. You can look at practically any candle and instantly gauge how big that candle is, whether you're talking about the wick or the body. Right here, boom, there's a 5 pip candle, right? Boom, right here. There's 2 pip body, 3 pip with wick. So you can spot the candle right here, 3 pip candle. No math. I don't have to put the cursor on it and see the high and the low. I don't have to go over here all the time and see, oh, what is the scale now? 1 pip, 2 pip, 10 pip, 5 pip, 3 pip. Set it to 5. Then you can instantly see these candles, because as I said yesterday, if I took that scale off the chart, if I took scale and price off the chart, time and price, you couldn't tell me what that is. That could be a 1-minute chart, a 4-hour chart. That could be a daily chart. You have no idea what it is, because the candles, their formations, and the patterns are fractal. They'll just scale up and down. So you just want to be able to know, without looking at anything, how big these candles are. I can tell you how big the wicks are, right? It becomes real easy because it's a scale you can mess with. And I don't have to constantly go over here and check. The less things I have to validate every time I'm trading, the better my RAS is going to tune in on the things I want to focus on. So the first thing I want to do is open this up. So now I've got my 5 pip scale. So if we look at this, we have a convergence, prices coming up, and we have green bars. How much room did that take? Here's the very low. Oh no, I'm going to use my fine tip so you can actually scale it. So there's the bottom, and there's the top of my entry. How long did it take me to get into that trade? Yeah, 2 pips. That top is right smack in the middle. You know, that would be the 2.5 pip mark. And we're clearly, you know, probably almost a pip up. So we could subtract it out. We're right around a 2 pip entry. Brian, the 30 is cycling down. It has no influence on me right here. We've been through this. I've already said that. Up here, it's getting too close. I'm fighting it. The 30-minute wave is coming up. And even though I have harmonic wave convergence here at the 10-minute, I'm only trading a 10-minute trade. I'm not going to trade that because the impulsivity of the 30-minute wave at its end can be strong. So I don't want to trade it. The 30-minute wave is cycling down. It's in the middle of the chart. That has no impact on a 10-minute trade that might go 5 pips. All I want is 5 pips. It's always cycling up and it's always cycling down unless it's snaking, right? Yeah, 1.785 pips. Somebody measured it. So, okay. But I want to do a little work. This is where some of you have just, and you know, if it's my fault, I'll take the blame, you know. But some of you just, TAB29 is the greatest confirmation indicator out there. That's just, you know, I'm not emotionally biased. That's just the truth. But it is a confirmation indicator. So you want to have some other stuff that makes you comfortable. Maybe I throw my INS on here. We're on a 1-minute chart. And so, you know, in a 5, where are we? Just with what we see on the chart, 25 to 5, in a 20 pip range, INS lines might, you know, you might see them look like this. You know, there might be one here and there might be one here for one system, you know. Maybe another INS system, there's one here and there's one here. And that's all you see for INS lines. I mean, hell, you're only on a 20 pip zone. You're not covering a complete daily range here yet. So the INS is too spread out for it to be any value to you. I still want to get something going here. The first thing I see is I've ruled out this as a trade. And I'm watching price move on. Watch price right now. See what you can figure out price is doing. So as price is coming down here, before it even gets to, or, somewhere in this candle or before, I see something. I'm not a major Elliotician, but remember I said there's just a couple things you need to understand about Elliott wave. The 2 wave and ABCs. If you want to get into, wave 4 can't retrace more than 17% into wave 1, that's fine. But, excuse me. These first two got a tickle in my throat and it won't stop. They're the important ones. Well, the 2-3 means the 2 wave. So you don't have to know all the fancy corrections and the measurements and simple stuff. You need to start looking for those ABCs. Now, I will say this. I'd say, again, I don't claim to be an Elliotician, but I'd say of the ABCs that I think are ABCs, I'm probably right 50, 60% of the time. The other time, they're not an ABC. I'm not going to dig my Elliott wave knowledge any deeper. I'd rather put that time into other stuff. But I'm not trading Elliott wave. I'm just using it to help me get a sense for what's going on. So the first thing I'm going to do here, once I see this move, and I can say I have a little bit more, the volume helps, guys. The volume of trades, volume of this, volume of that. The volume of Fibonacci's that I've drawn, I can tell you what this percentage is without looking at it. So the first thing I'm going to do, if I suspect this is an ABC, is what? What's the first thing I'm going to do? Funny, Jake. Yeah, the magic Fibbo. It's designed to project this C. So I put the magic Fibbo on my charts, and you'll notice something. Lord have mercy. I'm pulling this down until the 27 retracement hits what I think is the A. The B should be somewhere in a zone like that. But it's not. It's right on the line. So I have a perfect A-B alignment as I pull this thing down. The trouble is, this is where it says C is. And so as price gets down there, here we are. That's not a trade because it's still not yet the convergence. So, okay, my magic Fibbo didn't give me a good C projection that I could count on. Now here's the difference between an Elliott wave trader or someone who uses Elliott wave, but they're trading it, and a TAB29 trader. The Elliott wave trader is going to take this buy. They're going to not trust this. They're going to trust their Elliott wave, and they're going to take that trade. Wrong. You want to trade Elliott wave? That's fine, but don't call yourself a TAB29 trader. But there's something unique about this. Okay, it didn't give me the blasted C that I wanted. Put it up here. And I don't say I want this because price is still moving here. I'm just in this area now. No trade down here. So it's going to go deeper. I know that. So in terms of projecting the C, my Elliott wave tool wasn't any good. But don't stop there. This is where you guys have to be MacGyver. You have to be the explorer. You have to be your eyes open. Don't allow your RAS to shut down. Oh crap, that Fibbo tool, I went through the effort to put it on there. It didn't show me, didn't give me the, this was not the turnaround. You might think it is as it starts going up. And now that's a second place a trader will enter the trade is right here for a buy. Because they weren't sure, because there's a conflict between the C projection and TAB29, but maybe they didn't take it. Some of them too, some of those guys using EW, they're going to take that trade right there at 0.1, what they think is C. And then others are going to say, well, I don't know. But then it goes 1, 2, 3 blue candles. I think, oh gosh, that probably was the C. I better enter this buy. And they get schnookered. You don't want to trade Elliott wave. But there's something powerful about what happens here as I pull this down and I get this alignment here and I get this alignment here. You have to understand what's the value of the 27.6 pulling back to 72.4. Close, Todd. Tim. No, I did say Todd. Close, Thomas. No. You need to understand this, how the magic Fibbo was created. It was reverse engineered. Because an ABC, how do you form an ABC? A true, the ideal ABC, and guess what? They're only ideal, like I said, maybe 50% of the time. The rest of them, sometimes the C's there, sometimes the C's there, sometimes the C's there with these two lining up, with the A and the B lining up. But the ABC Magic Fibbo tool is based on what? It's based on an A 38% retracement, and then a BC, and AXA and BC are equal lengths. That's the Magic Fibbo tool. That's why sometimes it doesn't get the C right, because the C extends itself out. So knowing that, all it takes is what? Hey, Steve, why 27.6 and 72.4? Those are not normal numbers. Oh, no problem, Sally Sue. That's because they're trying to get a BC, a AB correction to be 38.2% of the move. Or I'll say, you don't need to worry about it, just move on. But ask the question. Be MacGyver. Be the explorer. So now that I know I can't project my C, I still see that this relationship of a 38% retracement of this move down is in place. Whoops. And so but where's your eyes? See, because Todd and Thomas guessed. You should be able to see that's not 38. Here's the distance. And here we are back up. 61.8, right? Don't let me control your RAS. So what can I do here? I understand that relationship exists. I'll confirm it. I'll put a Fibbo on it directly. And here's that wick, to the pip, 61.8. So now I know something. There's some Fibonacci-ness going on with this move. And what does that mean? If there's Fibonacci going on with that move, I can use it to project. And so now I have several projections that I can match up with harmonic wave convergence. It's not quite an energy point, but you can slowly rule out certain projections. Okay, here's a nice to the pip touch at 176.4. The problem was there was no pullback, nothing negligible, or the pullback was negligible. There's no trade there. The 1 minute wave hasn't hooked back up. There was a touch here at the 190.2. We're still flat. There's another connection. We're just starting to make a break. Starting to come back up. So there you have it. And then there's a third. So we've got some projections there that can help us. And much like an energy point, you're just following the waves this way as you're watching price come down. And I could trust these projections. Why? It goes all the way back to this retracement. So the pip at 61.8. And then I see compliance on the way down. You know, boom, boom, boom. So I can trust that trade as we pull up. And real fast turn to the waves. And as we said, 2 pips. Ideal. We're looking for that turn in 2 to 4 pips. This gave it to us fast. So now here's where a lot of you have questions, and I get that. And you have to have the answer to this before you start your trade. So you can see I've marked the extreme low, which was that 190.2 as the white line. My MLSL is going to be 1 pip below that. And I've got my green entry line for this blue candle on its close, opened up this space here. So I'm good to go. So you have to now decide, what are you doing? Are you going to take that 10-minute trade and go convergence to convergence with maybe your 40% as your secondary backup, or your ESL on the way from some convergence to another convergence that's just off the chart? Maybe you're going to just go 40%, POT it maybe. Too early to transition to anything else like the haul. So you have to make up your mind here what you're going to do. And that's, that's going to vary trader to trader. You're going to start with whatever your risk aversion is. And what I mean by that is you've entered the trade, and no sooner you enter the trade, this thing comes back behind you. There was no time for red bars to flip. You're already less than 40% of the move. So some of you may want to exit as soon as that red candle is coming down. Some of you may say, so you can POT, and you're going to be, in this case, however fast you get out, -1, -2, you got your spread. You can say, this is a bottom. I see the bottom here. 30-minute wave isn't influencing me. I'm going to trade true TAB29 which means what? You enter and you're not exiting unless it hits your MSL. So you're going to let it pull back. This is essentially on a very small move where it pulls back right away. This is back to allowing wave 2 to form. As far as once you get out of there and it taking off, if you take your, oh lordy, where'd it go? Seriously? 9. Oh well, I guess I just didn't save it. I had a slide with the 40% on it, and it doesn't get invoked. So from the bottom of the move up to the highest point right here, as time is moving on, that pullback, your 40% was like right about there. So it never got threatened. You never had solid red bars, and your 40% didn't get invoked. So you stay in the trade. That's what TAB29 says to do. And the first place you're going to be threatened is when it gets to the top, the 1 minute wave gets to the top, and we do have red bars. Don't stay in thinking it's going to go higher. You can see if this pulls back far enough to take you out, there'll be a re-entry most of the time. Don't worry about it. Stay in until you're supposed to get out. Wait for the bar flips. If they don't occur, but the 40% hits, then get out there. But nonetheless, a very simple 10-minute convergence, and you're going to get those pips. So we could say easily, that's about 3, and that's about 4, so about 7 pips before spread. Boom. One good setup for a 10-minute trade, you got your 5 pips. All of the stuff I see, not all, excuse me, a lot of the stuff I see is just crap trades. I talked about color levels for TAB29. Try this as green. I may or may not formalize this, but I was trying to make a point. But try this as green. A 10 1-minute convergence that is clean, that is not messing with anything. The 30-minute wave is not an influence. There's no snakes. There's no sliders. There's, is this at 20? Is this at 80? Oh my God. Go get this trade. Remember a green multi-wave 100 times. Well, here, go get that trade 50 times. And when you get that trade 50 times, you will know which ones are the good ones. You will know which ones are the bad ones. You will know by percentages, talk about this later, how you get your KSP. You will know whether you need to exit as soon as it comes back beyond your entry or whether you stay in for the MSL. Because you'll have enough examples there, it'll be dominating. You'll know what you want to do in the best 10-minute convergences you take. But there's only one trader that I know of that's done that. Because, oh, well, if I do this and I do that, let me POT this and I can make more pips. Or, oh, look, it looks like the 10 minutes almost up above 80. Maybe I should do a sell into the, all this crap. Go master the 10-minute harmonic wave convergence by itself, where it's not threatened with the 30-minute in any way, shape, or form. Well, I thought you said 1030 trades are better. No, 1030 trades are stronger if they go at that point. But maybe it just goes up a few pips and decides to pull back down on 30-minute snaking. Don't worry about complicating. Don't worry about, see, I get to the end. I don't want to like get to steal the thunder from the end. Just go get these trades. Yeah, 15 minutes, just going to be a little less, slight less perfect frequency of them, but they'll be a little bit bigger in the move. 15 minutes, same thing. Just get this, get these pips. Even if it took you 2 of these to get a total of 5 pips net. My God, these are so easy. These should be burst trades every time. All right. So there was a trade posted, or, some setups posted on a stretch like this. And you want to see something. Now, there's more price movement off the chart. Again, full disclosure, price came up here and then it started coming back down. And so I opened this up just for this. Don't worry about the scale right now because I'm not talking scale. I just want to see what's going on here. And I have to, well, you'll see. So I did stretch this out purposely to get that price off the chart. I just wanted to have clean stuff here for talking about this. So there essentially was the move. Actually, I think that the trader's post was starting somewhere about there or maybe here. But I backed it up some for a reason. So this is a little bit what the trader saw when they looked at that move. Again, my move comes way down farther. I just picked it up where this trader had posted. So what I see when I look at this is there's a pretty pronounced upward trend. I didn't have any pitchforks in here to work with that I can measure this upper trend with. And again, I've stretched this out way beyond where it should be proportionality-wise. But I see an uptrend. There was also a lot of discussion on this. Well, not a lot, but there was some discussion on this about the tops. Of course, there was a scan. So they were trying to catch, a scan. And you can see the XAD of that scan entry line that he painted green, pretty strong point. But don't forget what's going on. Don't let the scan psych you out because the scan is painted on your chart, even though it wasn't reproduced here. This is what you had going on. So I see this a little differently. I want to get some idea of what's going on from my main tool, which is a pitchfork. And as I draw my pitchfork and get, a couple of median hits that are just to the pip and nice on top of an external bounce, and then I get another median hit here to the pip, pretty exciting that you can say, hey, that fork is proven. I can use that fork. The other thing you guys are forgetting to do frequently is draw trend lines. Why are trend lines good in the TAB29 world? Why are trend lines good in the TAB29 world? Important answer. Yeah, you can have tight entries. Daniel hits the biggest one. Michael got it. You don't need trend bars to flip. All you need to see is the contact with peak 3 making a turnaround and making its own hook back. And if that hook back is occurring on a trend line, you don't need trend bars to flip. What else? So no trend bars. The second thing is you could throw pot out the window. You don't need perfection in this case, in higher lows. On a sell, you don't need perfection in lower highs. Perfection meaning I don't care what size, whether it's higher or lower, doesn't matter. All I need is the trend line and peak, flip. So what you're doing is you're making your criteria more simple. Less things for you to have to worry about. I draw pitchforks, they define the trend. I draw trend lines as much as I can because they let me, I won't say violate, they just let me jump ahead. I get to skip these steps that you're waiting for elsewhere. Now you could make them really super by, going further and putting Fibbo on it, putting your INS on it, putting shadow bands on it, but you can keep it simple too. This is strong because it's an energy point. That's a great buy. Here's your fourth hit on the same trend line. That's a great buy. Up with angle, meaning it's impulsive. Oh my gosh, 50% of the green level traders every day send me, here's the price move, and they're trying to get your trade up here. And we don't trade impulsively. We don't trade impulsive moves, and they're like, well, it seems like we're always giving up the best trades. I was like, well, yeah, you'll get it when you move to bronze and, or at least a rudimentary understanding of multi-wave with buying the sell and selling to the buy. So you get to skip this stuff. Second trend line bounce. This is a fun line. First bounce, second bounce. I could take the second bounce because it's the median. Oh, but the 10-minute wave isn't down to 20. Yeah, I know, but it's a median bounce with a 1-minute wave at extreme. Third hit on the trend line. Oh, by the way, that median bounce, where'd it go? Opposite parallel. That's a trade. But you're trading into, well, put some Fibos on this. Here's the third line on your trend line. That's a trade. Here's your fourth hit on the trend line. That's a trade. Doesn't matter whether this is higher or lower or what these relationships are. I have my peak one. It's flipping. Price is hitting the trend bar. Take the trade. Third hit unless it's something like the median. It's always the third hit. So there's tons of trades while you're waiting to catch, whenever it paints, while you're waiting to catch some scan. This is the old paradigm part that we like. This is the trend, and going with impulsivity is your friend. Just open your eyes as to what's there. So we get down to, something that's kind of interesting. So this was pulled right from the TAB29 trading. What it takes to really be part of that 5%. The attributes of the successful trader. And I've got some changes already to this slide, so it'll, next version will be more clean, and I'll probably just reintroduce that slide now, soon, instead of waiting for the next TAB29 trading. But I've updated this. I've there's a lot of redundancy here and stuff scattered in its order because I remember putting that slide together pretty fast. But that, I still hold to this. This isn't going to change. And there's a couple of things that are kind of conglomerated together. The first one is you know what you are trading. That first trade we looked at where we analyzed it and we said, don't take that 10-minute trade, but take this one instead. All right. And we said, you got to know what you're doing trading in. I'm going to harmonic wave to convergence with a 40% stop loss. That's what I'm going to do. Or I'm going to POT trade this. And if it pulls back anytime after I enter, if it pulls back right to my entry, I'm out of there. Or I've only gotten in this trade, in 2 pips. I'm going to let it come back and check for a wave 2, a 1-minute wave 2, rather than exiting. So I'm going to use my MSL. So there's 3 different choices right there. Which one should I use? The one you see over time is the thing to trade for you. You know what you're trading before you pull the buy button or check the buy button or check the sell button. KSP comes from what? Volumes of trades. KSP comes from what? You're in your laboratory. It's okay to do things wrong. You know them. Remember, it's all about learning what not to do, but then you learn from that. Patience and waiting for that better trade. Patience in establishing what your money management is going to be once you say go, instead of just jumping around. Oh, look, here's a trade. Let me enter. And the heart of this, really, when you get down to it, is you have to be an opportunist. I can't say it. I've said it 1,000 times. I'll say it another 1,000 times until I can't breathe anymore. You have to be the MacGyver. You have to have that ability and confidence. And that comes from you being the explorer and the researcher. This is big. Be the explorer and the researcher. I get very frustrated because I can almost see it's the kiss of death for a trader when they ask me certain things that they have the power to find out themselves. And yes, I want to offer shortcuts, but at times, I want to compile my mistakes over the years and make you find success much faster than I did, or in a higher way, much faster than I did. That's why I teach. But sometimes the fastest way is so you learn it. So guess what? That neuroplasticity takes place. It really gets built and ingrained into your brain. It's like embossed. And there's so many questions you guys ask sometimes that you could answer yourself. Not even just in forward trading, but looking backwards. The size of the candles on a 1-minute move shouldn't move the waves that much most of the time if you're trading pairs that aren't that wicky to begin with. I see traders trading stuff, and sometimes I have to say, hey, look, wick, wick, wick. That's not setting up yourself for the best trade. That's taking a crap trade. When you got a whole bunch of wicks on the chart in front of your trade, that already says there's massive indecision. What you're doing is playing roulette at that point. Well, the waves say this. Yeah, but the candles tell you also that there's a lot of indecision all the time in that pair right now, in the last hour, in the last 24 hours. I don't care that the pound or the pound yen is your personal favorite. It's not the time to trade it if you got decent sized wicks. Find another pair or don't trade. But I got to get my 5 pips. Getting your 5 pips is an objective. But you don't try and get 5 pips and end up with minus 20 because you were taking crap trades. You've got to be the explorer and the researcher. Well, which is really best? Should I exit if I enter the trade and price comes back to my entry line? Should I exit to minimize my loss, or should I use my MSL? Either one's fine. Just give me a good reason, and then the reason you do that is because you've seen, not you just didn't flip a coin. For you and the trades you've taken, 50 trades, 100 trades, you've seen which one is the best thing to do because it's going to win most of the time. It's going to give you what you need most of the time. And the time it's wrong, guess what? You don't worry about it. That's what KSP is. But you guys are missing that step of being the explorer, of being the MacGyver, of seeking for yourself, as if there wasn't a support group, as if I wasn't around, as if your life had to depend 6 months from now. And you guys have already been at it a while for most of you. I know some of you are fairly new. I'm talking about the guys that have been at it 3, 6 months. 6 months, 9 months from now, if you had to make your money from the Forex, it was an imperative at that point. And there was no me. There was no group to support you. The way you would do it is trial and error. And then it's not somebody teaching it. It's not, I mean, some of the stuff that goes on in a group, you guys got to watch this. Hey, what time did Steve say the OCR was starting? Hey, okay, that's a peer-to-peer question. When I see somebody in TAB29 who cannot trade a 10-minute convergence 50 times in a row and win 80% of them, giving advice on waveology, I just shake in my chair. And then turn right around the next day and have all sorts of questions about something even more simple. Just not getting grizzly, I'm just being honest. You can't be spoon-fed for everything. It's not going to happen. And when you get into that reliance, oh, well, I thought you were always here for support. We are. But ask your questions. I mean, we've got some great traders who, with great knowledge who've been around, some of them many years. And they walk through Shredder. We actually had a little interim step with SBT, which was Shredder burst trading. And we had some of the components that you have right now. Not as good, but close. And they went through that. And these are people that, I mean, I'm not trying to be negative on anybody that I don't mention. But, Mark stands out. Mark has the knowledge. But it's not that Mark just was a great, he heard it once and he knew it. When Mark makes a post offering insight, that's not from something he noticed overnight. Trust me. That's from a lot of testing. That's from a lot of research. That's a lot of years, plural, trial and error. And all the time noting observations. Not to put Mark down, but you guys could do the exact same thing. You just don't bother to journal. You don't bother to try and learn your lessons. You don't see yourself as, I'm responsible for learning how to trade. I'll take all the help I can get, but I'm going to do it without that help if I have to. You haven't yet made yourself accountable and responsible for your learning. And you want to be spoon-fed. A lot of you, not all of you, a lot of you. And so be the MacGyver, be the explorer, Magellan, or whoever you want to make your explorer. Be Lewis and Clark, going, be Captain James Kirk going where no man's gone before. Repetition through your volume of trades will tell you where to go. And then all of a sudden you're going to see things repeating and repeating and repeating. And now you could count on that happening time and time again. And now you're getting KSP. Instead of just trying to do anything, you skip right past green level tab 29 trading. Go get that 10-minute, 1-minute convergence. You just, I don't need to do that. I'll try, I got the 4-hour here and the 30-minute there and the 10 minutes at this point. And it's like, yeah, you want to get there eventually, but can you please go back and get it right from the beginning and build on that? So a little summary here as I wind it down. 2 hours instead of 1. Wow. Harmonic wave convergence is a science. Science. Tab 29 is a second generation harmonic wave convergence tool. You see on the left, that was the slide announcing the initial training, June 7th, 2017. So it's not even a year old, right on the cusp of it. It was introduced after 90 days of beta testing, myself and a couple other people. But it's not completely new technology. We had that interim via SBT, via Shredder Burst Trading. Like multi-wave, there will be traders, because it's so diverse, because it's a science and not a model. And there's so much there. There are some blanket things that I would say, do this because it works. And yet weekly I get questions about the most sophisticated ways the waves are doing their things, and it's like, wow, how many times have you seen that happen? How many, why are you seeing that? Have I ever taught it after now 15 months of trading it? If it was something that was so repeatable and so high percentage, and I knew about it, I'd be trading it and telling you about it, sharing it with you. Like multi-wave, there will be traders who over time become much better versed in specific areas of its use than I am. There's just points, because there's 6 waves and 6 bars and so much going on, that there will be specific instances of things that I've not run into and I don't trade. Or some of them I've run into them and I've elected not to trade them because they don't have a percentage associated with them. But there will be people that can trade, that have traded multi-wave. In some cases, in certain aspects, they'll do a better job with a certain kind of trading. The same is going to be true in tab 29. This next year is going to be a breakout year. There will be 100 people that trade elements of tab 29 that I've either never noticed, never seen, because my RAS, right? That may work and are so repeatable for them, they just do it over and over and over again. And then you might have 2 of those people and neither one trades what the other one trades, but it's still tab 29 because it's the science of harmonic wave convergence. So when you guys concoct a trade opportunity and it's out of the world, I'm just going to tell you from now on, I'm just going to say, no comment. And that just means I don't have the knowledge. If I can see why you shouldn't trade it, I'll tell you that. But I have no comment because I haven't tried doing that 100 times where I can speak intelligently. Even if I can give you an answer on this one instance, I don't want to do that because it's not based on a VOT. I want to trade it. I want to see the results. I want to get that KSP. I want to be able to trade it subconsciously. So you guys, we've reached that point. We're a year into it, and a lot of you advanced traders are going to do stuff, and have a better insight of some things. There's places where I'll know the concept, but I don't execute it because I don't trade that. Marianne's a perfect example. She dove off at the end of the year to be expert at 4-hour trades. And she's got an RAS and a visual for the wave movement at the upper level down that's stronger than mine because I don't trade a lot of upper level waves. So that's just going to be a fact. But what works and what works repeatedly, I know. And if you get back to the goal of 5 pips a day, we got some stuff with 10-1 convergences and just being selective. And you're going to do just fine. But I also see some other things, and I want to point those out. So, that person, those traders that get better, stronger in other areas that I don't trade, they're going to plot, they're the MacGyvers and explorers that plot that new frontier. Hopefully they'll share with us. Hopefully they'll give back in that manner. And it'll be some pronouncement, but looking back, hey guys, for the last 3 months, I've taken 77 trades with this, and I've won 62%, 62 of them. It's a very high repeatable move that you can trust. And here it is. Trouble is, traders like me to share all my knowledge, but very few actually are willing to share theirs. Do the basics, master that, then grow. Okay? Go back to that green level TAB29 trade. 10-minute convergence. Find it clean. 30-minute waves, not an influence. It's not converging. It's not snaking. Just do that. And once you master that over 50 trades, then you could start moving on other stuff. I see too many traders going to the charts and jumping right to the waves. And what they're trying to do is look at the plots, and they're trying to create a trade to fit it. That's reverse engineering, and it's not going to work. You need to go to the charts and see clarity see clarity with what is happening on the charts. If you can't see clarity on the charts, you have no business trading them. Look for another pair and another time frame where you can find clarity. Always start at the 4-hour level, and then drop to 30, and then drop to 10 or 15 if you're catching scans and trading it that way, and then drop it to the 1 minute. Make sure each subsequent time period fits into the one in front of you. You can see what it was doing, how it happened. Don't be afraid to put some fibos on it, like that 1 minute chart I just showed you. Hey, this looks like an ABC. Let me put the Fibo tool on it. Oh, look at that. It hit A and B to the pip. Well, it didn't give me the C. That's okay, because it told me the relationship between X, A, and B is what makes a typical move that's very measurable, so now I can project off of it. So you can play around like that before you even decide to trade. See which moves, have that nature to them. Man, I didn't put it on here, but you're a fool to not use pitchforks. Some of you just think, oh, that's one of those things Steve does on the side. 95% of what I'm going to be trading from here on out are scans and forks. That's it. Forks on scans, because that's the highest percentage move anywhere on the chart at all times. That scan D point as a swing high or swing low of your traditional fork, it's unbelievable what it does. And you could take those pitchforks, all levels, 30, 15, for the scans, initial scans. I draw pitchforks on 10-minute charts. I draw pitchforks on 1-minute charts. You will nail things like, when you have multiple convergences because of a snake, you will nail which one by having a pitchfork on there that has perfect hits on it in 3 or 4 spots. But that's not green, that's silver in tab 29. So quit trying to create trades by looking at the waves. Go to the charts first. Get clarity on what is happening. And don't be embarrassed. If you're struggling with that, take a screenshot, put it on here, and have, I'm struggling seeing what's going on here. Journal your journey. You should have a journal for your life. So just your life in general. You should have a journal specific to your trading. And then you should have a gratitude journal. It's the real key to abundance, to being a magnet and to put law of attraction in your favor. Just have a gratitude journal. So 3 journals you should spend your time on daily. Planning. Oh my gosh, go back to the basics. You gotta have a life plan, or you're a ship at sea without a rudder. Gotta have a life plan. What are the dreams? What's your purpose? What's your why? And let's go define it. Make it into a goal. If you need Goalmaker, use Goalmaker. If you could do it on your own, then do it on your own. But have a plan that dictates the year, then the months make up the year, and then the weeks make up a month. So come Sunday night, you sit down and you say, what has happened this past week? Where am I in terms of tracking on my monthly goal and then my annual goal? If you make your monthly goals, you're going to hit your annual goal. And if you do hit your weekly goals, you will make your monthly goal. So the key is, the most important time is the weekly plan, and then getting it set and then executing it. Tony Robbins says it, and it just can't be said better. Most people will spend more time planning their 1-week vacation than they will their life. Think about all the logistics you go through. But don't do that for your life. Just hey, Monday's coming, okay. Sunday night, you need to know what you're doing this week, and you better challenge yourself. If you make it so easy that a 3rd grader could do it, you're wasting your time. You need to challenge yourself. You need to go hard. You need to break a sweat. You need to make sacrifices so that weekly goal will be met, so the monthly goal is met, so the annual goal is met. And even if your target changes, even if the goal changes, the process and the person you become by doing that is going to give you great things. In terms of trading, in terms of tab 29, in terms of how we work, if you will, learn to understand when you can just do this is how to do it. In other words, well, what do I do here? And I say, this is what you do. Well, why do I do it? Just trust me. Just do that. You need to trust that when that's your answer. This is how to do it. Just do it this way. Here I am trying to compress the time for your success, and so many of you don't want that. You want me to have to tell you how everything works that I've spent 15 years busting my butt to get through. You want to hear that whole story before your ego will allow you to trade it that way. And it's like, I don't understand what we're doing here. I'm supposed to be compressing your time and you want to expand it. But there are times where you need to know how this works. And that's a growth thing in terms of trading. Just accept it, do it this way, learn how so you can tweak it a little. You can be the MacGyver and make it work better for you. They're 2 different circumstances. You want to start to discern which is which. Overall, patience. Patience with yourself, patience with tab 29, patience with me, patience with our support group, patience with the Forex, patience with you. And then you'll be good. All right, so that's it for today. Sorry I went much longer than I anticipated, but we got some foundational stuff out of the way here as well. Hopefully you got some value out of this and enough to make you come back next week. So with that, I will say have a great day. Have a great weekend. In the States, it's Memorial Day. It's our kickoff to the summer. All the pools open. There's picnics and barbecues, a little remembrance for people who have passed on. But I'll be back Thursday for you guys. IMLers, you know the schedule. We will be shut down Monday as well. So with that, remember, life can be short. So for those people you care and love, let them know you care and love them. I love you guys for carving out the time to be here today, and I will see you next Thursday.